All right, traders. Hopefully you guys can hear me. Testing. All right, I think we're good to go. All right, let's talk about this crazy market. And looks like you guys can hear me. So, hey, Miguel, how's it going? Shahab. All right, so first of all, let's talk about the euro and how it has just gotten demolished. It doesn't even matter, what the ECB does and they threw the kitchen sink at the market, and the euro now looks like we are going to 106 possibly, which has a lot of repercussions. I mean, the cable. The Bank of England acted today. They lowered rates. At first, the cable liked it, but I'm going to tell you guys, if the euro continues to drag lower, and it's not just because of the ECB. It is the massive dollar demand that's out there right now. There's a good chance that the cable can turn lower. So for those of you guys that are playing on the long side here, be careful, because we could be. I know I'm going to draw some scary stuff. So just I'm drawing more of like potential. No, whoops, crap, I didn't want to do that. I have to kind of point out the potential versus, it's so volatile out there and things are changing so rapidly. But if you think about like this and the cable, just be careful if you're long. I mean, we just hit about a 38% retracement, 50% retracement, and reversed there at 118. And we're moving lower. Okay. Again, if the euro continues to drag lower, which my assumption is it is, and my assumption is we're going, like I said, down to 106 roughly, maybe even a little bit lower. Then you got the cable that could do what it's doing. I know there's a lot of flows going through the euro pound, but that'll only last so long. You have the Aussie, which big squeeze, and check out where the Aussie stopped at. Right? Previous support, current resistance. So if you're on the long side of the Aussie, you've got to be thinking, oh, shoot, hopefully you're already aware of that. But let's take a look at the Kiwi. Same thing, right? Hey, if you're long, it gave you an opportunity to get out right where it should have, right? Okay. Look at the dollar Canadian. I was thinking, man, we had a head and shoulder here. A couple of us in the chat room were talking about it, and it's not playing. Then on top of that, you got the dollar yen. Let's talk about the dollar yen for a moment. I know I just sent out a tweet, but I got to show you this chart. All right, this is the daily, the euro yen, and let me delete this stuff. So this is probably one of the biggest screw jobs that the FX market has seen in some time. Not only did we get a false breakout above, we got a false breakdown below, and now we're sitting at at risk of breaking through 112. I don't really know if this dollar demand is going away, because if I look at equities, they look in trouble, right? Still, I mean, I know a lot of you guys are like, but we're recovering today. Are we? I mean, are we? So when you have a, V-shape move, the recoveries here tend to exceed the previous move. So, I mean, we could very well be at 115. Now you go, oh, well, what could take us up there, Blake? I mean, will it be stocks moving higher? I don't think it will be. I actually think it's because the bond market will start moving lower. Look at the 10-year. I know the 10-year bounced today, but look where we're at. Now, we have a bull flag pattern. That doesn't mean that we're going to play out, but it's there. But we have a false breakout right now. So if bonds... Okay, sorry, I was just listening to one of the guys from my office. Hold on, let me turn that down just a hair. So this false breakout in the bond market could lead to lower a lower bond market, higher yields. And that's same with like the 30-year. You look at the 30-year, this is getting destroyed. Yeah, I know we're bouncing a little bit, or at least consolidating. But, when you lose faith in government issued debt and yields start moving higher and the stock market is moving lower, what's the dollar going to do? Especially the dollar yen. It's forced to go up, right? So, I'm gonna tell you guys, I know a lot of you are trying to, play the dollar and you're trying to short the dollar, but you got to be really careful. This dollar, I mean, we could really surpass, this 102 level, and quite frankly, we could go a little higher than that. Let's just take a look at the dollar index, and this is a weekly chart, so just bear with me. Okay, let's go back to 2000. This is 2002, 2001 to the lows. We're above the 618. I mean, think about the dollar going to 110. You think it's possible? Do you think it's possible that the euro dollar drops back below parity? I think so. Why not? All right. You think that it's possible that the dollar yen could go to 115 to 120? Sure. Why not? Cable to 110? Sure. I'm not saying it's going to. It's just you got to think about the potential, especially as the bond market's kind of showing us. Yeah, I don't know if yields are going down. I mean, it is definitely a hard. It's hard to wrap your mind around a lot of this stuff right now. But I'm going to tell you guys this: the markets are so volatile. Here, this is a good example. I just got scared out of my bejesus just a minute ago. I bought the Euro Aussie right here at 85, right there. Right there, right as we were spiking and then turning, because I saw the trend line. I put it in the chat room. I bought it. I made 50 pips on a really small position, guys. It's not nothing to write home about, but it was so fast. But after an 1800 pip move, I mean, I expected us to at least bounce. We did. We bounced way more than I thought. We bounced actually about 150, 200 pips. But what I'm trying to illustrate to you guys is these moves are so violent and so fast that you have to be careful. You have to be trading fractions of what you normally trade. I'm literally trading a third to a quarter of my normal size right now, because in the dollar yen, to give you an example, I could buy the dollar yen. I could buy a couple million a dollar yen. It takes it moves 20 pips. I make a few grand, whatever. Now it's like I can buy dollar yen and I could buy a few 100,000 and like a 500,000, and I could still make that in a blink of an eye because these moves are so fast. I can also lose it too, which I have done. So don't think that it's all rainbows and unicorns around here, because it's not. This is a very violent market and it's very nasty. Okay. And I have been on the wrong side. I've been on the receiving and giving side of both of those, of every trade for the last week. I've had a really choppy week. I had a good month going up until this week. And now this week I've been up and down, and I gave away a little bit of my profits, not much, but it has been sloppy, violent, and I mean, I guess that's all I have to say about that. Now, with that being said, you guys, we have launched, it took us all week to put this together. We have what we call the volatility offer. If you guys want to be part of ForexAnalytix and be in the chat rooms with me and the rest of our staff and a lot of great traders, a lot of people I've been chatting with for 10 plus years in that chat room, take advantage of ForexAnalytix. It was such high volatility. We just wanted to make sure that you had a safe place to come and talk and be with us. So take advantage of it. All right. Because it's not going to be here forever. Anyway, I hope you guys have a wonderful day. I don't even know if I'm going to be trading tomorrow. It's Friday. It's been such a volatile week. I'd love to see the dust settle a little bit. Spreads are so wide, it's, you know, it's amazing. So I know you guys are probably feeling the same. And also, oh, one last thing before I let you go. One last thing. You know, I was talking to a couple guys in my office, and some of the guys have kids that work on trading desks, stuff like that, at different banks. Everybody's working from home. Let's say 90% of Wall Street is working from home. A lot of traders, you know, you know, I'm set up here with my Bloomberg and everything. A lot of traders aren't, you know, a lot of traders don't have all their tools in front of them. And I mean, I have a home office, so I'm used to trading from home. But when you're in, you know, in the city or New Jersey, and you know, you may not have a home office, and you have your limited tools, limited capacity. You're taking phone calls. You're trying to get order flow through. It's adding to the lack of liquidity to this market. So when you see really wide spreads, or you're wondering why we get these big spikes here and there, a lot of it is just lack of liquidity. And so you have to expect it, rather than, you know, and I don't think it's going to go away necessarily. But what I do think is going to happen, hopefully, is we're going to see price at least calm down just a little bit. You know, we're going to see, you know, instead of like this in the Aussie dollar, instead of having a 460 pip trading range intraday, maybe it'll slow down to like 200 pips, you know, or 150. Boy, that would be nice. I like volatility, but this type of volatility is, you know, you got to be careful what you ask for. Remember how I was begging for it, you know, the last couple months. Well, we got it in spades. So hopefully it just, you know, settles down a bit. Anyway, guys, gals, I hope you have a great trading session. I will not be here Friday because we don't do these daily Roundup webinars on Friday, but I will be on the Face webinar tomorrow morning for sure. So I'll see you guys there. Have a great one. Thanks for being here, and take care of yourself. And for God's sake, wash your hands.